I hope you guys will toast along with me a new recommendation in a new industry. So here's to GRANGE Resources, which, along with many other mining companies in Australia, has enormous resources, which they're producing, of high-grade iron ore, mostly for the markets of China. And I want to congratulate some of our readers who have brought this stock to my attention, because it's primarily so cheap that it can't be anything other than a buy. I'll give you an example. In terms of earnings, it's selling at 4.4 times earnings, which is also very cheap. The market cap is, I believe, a little less than $200 million. The assets, the stockholders' equity, is several times that. And it's mostly, as I say, in two major mine locations, one in Tasmania, which is the one they're producing, and the other in Western Australia, which is even bigger, has enormous reserves, but they are looking for the money to finance putting that mine into operation. And so, in addition to the high value of the stock relative to all of their assets, they have no debt, and even the cash that they have, over $200 million in cash, is greater than the entire market cap. Finally, their most recent numbers, I think they have somewhat of a rebound, because they did have a loss in the, I believe, second half of 2024, but came back to a profit in 2025. I think what's going on is, if you look at the volatility of the price, which essentially comes from what's the demand for steel in China one year after another, you had a situation where, I believe in 2021, you had very high prices, great demand from China, and the stock was significantly higher than it is now. They also were paying a big dividend. But in the intervening period, from 2021 to now, there's been a steady decline in the price, a steady decline in the profitability overall. As a matter of fact, a year ago, they eliminated the dividend, all of which I think does account for the currently low price, as I said. When will things get better? If you look at the price action expected, we're pretty close to the bottom in terms of prices. And we currently have a sluggish Chinese economy. Also, a thing which I haven't checked on too much, but my assumption is that one reason that demand for iron ore in China is relatively sluggish may well be the overbuilding of real estate that happened in China, to where they've got millions of housing units, apartment units that were built, I assume, with a lot of steel, and are now sitting vacant. But because the stock is so enormously cheap, I think it's a very good buy for the long term. And so, one more time, here's to GRANGE Resources.